All right, let's dive right into this. If you're a focused learner looking to finally step onto the property ladder here in Canada, well, you've landed in exactly the right spot. Welcome to this explainer. Today, we're unpacking something that is literally going to be music to the ears of first-time home buyers. We're talking about unlocking up to, get this, $130,000 in savings on your new Canadian home. And yeah, you heard that right. It's not some gimmick, it's a very real government initiative. Understanding how it works could absolutely change your financial future. To help us navigate this, we're leaning on the expertise of Charles Ndegwe. He's a certified professional accountant, and he's with the team over at CNA Professional Accountants. Their mission right now is laser-focused. They want to educate buyers so they absolutely do not leave tens of thousands of dollars just sitting on the table. Charles has actually seen firsthand how clients walk into his office totally unaware this rebate even exists. Or maybe they just don't realize the sheer scale of the savings. So we're taking his insights and translating them into a clear, actionable playbook for you today. Think of this as your insider's playbook. We're breaking this whole thing down into 5 quick plays. Number 1, the $130,000 rebate secret. 2, do you qualify? 3, the math, breaking it down. 4, claiming your rebate. And finally, number 5, why professional planning matters. Let's get into it. Part 1, the $130,000 rebate secret, the hidden cost and the ultimate solution. Look, we all know the pain of housing costs lately, right? Saving up for a down payment can feel a bit like, trying to hit a moving target. But here's the hidden problem you're up against: 13%. When you buy a newly built home in a province like Ontario, that purchase price normally includes a massive 13% HST. That is a huge hidden cost tacked onto an already massive purchase. If you're scraping together every penny for a down payment, finding out there's an extra 13% tax bill on top, man, that is a heavy, heavy blow. But here's the ultimate solution. Under this newly enhanced government program, eligible first-time buyers can actually receive a rebate of up to 100% of that HST, and that rebate maxes out at a staggering $130,000. That's money going straight back into your pocket, or more accurately, it's money you never even have to come up with in the first place. It is an absolute game changer for affordability. Moving on to Part 2, do you qualify? The rulebook for eligibility. Now, the government obviously isn't just handing this cash out to everyone. You gotta fit a very specific profile. Let's rapid fire through these personal rules. First off, you gotta be an individual, so no corporations. You need to be a Canadian citizen or a permanent resident, at least 18 years old, and crucially, a first-time homebuyer. But wait, here's the absolute most important rule on this list. The home has to be used as your primary residence, or, the primary residence of an immediate family member. Basically, the government is strictly targeting folks who are buying a home to actually live in it. And it's not just about you. The property itself has to qualify too. So which homes make the cut? Well, it has to be a newly constructed home directly from a builder, or a substantially renovated home that meets some very specific GST and HST rules. We're talking new condos, townhouses, semi-detached, or detached homes. But, and listen to me very carefully on this one, this strictly does not apply to resale homes, homes that have already been lived in. It absolutely doesn't apply to investment properties you plan to rent out, and vacation homes are a no-go too. So if you're a flipper or an investor, this particular playbook isn't for you. This is for primary new build residences only. All right, Part 3, the math. Breaking it down. Let's look at price brackets and real savings. Let's translate all this confusing tax jargon into tangible, hard cash that actually makes sense. How much are we really talking about here? Well, the government scales the benefits based on your purchase price. If your newly built home is up to $1 million, boom, you get the full 13% HST back, every single penny. Now, if your home is between $1 million and $1.5 million, you get the maximum capped rebate, which is that magic number, $130,000. But if you're buying between $1.5 million and $1.85 million, that rebate starts to gradually reduce. And hey, if you've got the budget to buy a new build above $1.85 million, well, the government basically says you don't need the extra help. There's no rebate available up there. Let's make this super concrete with a specific real-world example from Charles. Imagine the base price of a home is $600,000. In Ontario, you tack on that 13% HST, which is $78,000, bringing your total price up to $678,000. Ouch, right? That is a massive hit. But if you're fully eligible under this new program, your potential rebate is that entire $78,000. It's completely wiped out.
So the final amount payable after the builder credits your rebate drops you right back down to that $600,000 base price, plus your standard closing adjustments, of course.
Which brings us to part 4, claiming your rebate, executing the play. Knowing you're eligible is fantastic, obviously, but how do you actually get your hands on the money? There are generally 2 main avenues here. Option 1 is assigning it to the builder, and option 2 is the buyer applying directly to the CRA. Now, option 1 is by far the most common and honestly, the most beneficial for your immediate cash flow. With this route, you just assign the rebate right over to the builder. The builder then credits that rebate directly on your closing statement, meaning you pay way less money out of pocket at closing. The builder is the one who has to wait around and apply to the CRA to get their funds back. If you decide to go with option 2, you have to pay the full purchase price, including that massive HST hit up front, right out of your own pocket. And then you have to apply directly to the CRA after closing and just wait for them to approve it and mail you a check. Let's be real, nobody wants to front tens of thousands of dollars if they don't have to. So, what does this actually mean for your purchasing power? Here's the absolute crucial takeaway. While this rebate usually isn't your initial down payment when you first sign the contract, assigning it to the builder means you physically need less cash to close the deal. You're looking at a lower overall purchase cost, a smaller mortgage, much lower borrowing costs, and ultimately a much better chance of owning a home sooner instead of waiting years just to save up for a tax burden.
Finally, part 5, professional planning matters, the CPA advantage.
So the really critical point here is this. Knowing the rules, that's only half the battle. Executing this perfectly without any of those really costly mistakes means you need a professional in your corner. And guys, you need to act with a sense of strategic urgency here. This enhanced rebate is totally temporary. The program only applies to qualifying agreements of purchase and sales signed between April 1st, 2026 and March 31st, 2027. Given that today is August 2026, we are sitting right smack in the middle of this temporary window. You absolutely must take action and sign eligible agreements before the end of March 2027 to capture this massive benefit, because the broader program officially begins expiring in 2031. The clock is literally ticking. So, what's your game plan? Step 1, you have to keep impeccable records. Keep copies of your agreement of purchase and sale, your final closing docs, and absolutely hold on to your statement of adjustments and proof of primary residence. That is vital just in case the CRA comes knocking for an audit down the road. Step 2, speak with your lawyer or your accountant before you finalize a single thing. And step 3, once you're absolutely confident, go ahead and sign that agreement of purchase and sale. I actually want to read this powerful quote straight from Charles Ndegwe, CPA. He says, "I'd rather you ask the question early than find out you missed something at closing." This perfectly hits the nail on the head as to why CNA Professional Accountants strongly encourages planning conversations before the ink dries. Trying to untangle tax eligibility after a real estate transaction has already closed? That is a total nightmare you want to avoid. Get a second set of eyes on those documents before you commit. So, I'm going to leave you with this final provocative thought. Are you going to leave up to $130,000 on the table, or will you plan ahead? Buying your first home is probably one of the biggest financial decisions of your entire life, and this rebate completely changes the math. If you want to secure your savings and figure out exactly where you stand, reach out to Charles Ndegwe and the expert team at CNA Professional Accountants today. Don't let this temporary window close on your dream home. Thanks so much for learning with us today on this explainer.